I would say that the quarter was largely as expected, but showed accelerating revenue declines. EBITDA was down 6% just for the communications business. For us, earnings were a little bit light. The Time Warner business was solid, but as we look ahead, we're looking at more spending on content, higher integration expenses, and we thought staying on the sidelines makes sense.
When you math out the additional expense of the investment that needs to be made in the Time Warner business to turn this company into the sort of content powerhouse that Randall wants it to be, what do those numbers look like? Yeah, well, first of all, I would say that there's two parts to that. There's the addressable advertising part, which they should start to see ramp over the next couple of years, and then there's the direct-to-consumer effort that led by Netflix and Amazon, and right now HBO spends about $2 billion a year. And I think you're going to see that go up. They framed it a little bit by saying they would reinvest some of the synergies. The synergies are expected to be about $2.5 billion a year, so that I think brackets it. But you're going to see a big. When you say brackets it, you think an additional $2.5 billion is the top end of the kind of money that they would invest in HBO. And it's going to take some time, but yeah, I think that's a good way to think about it.
How can they afford to do this? I mean, their organic revenues are shrinking effectively. All their businesses, except for the ones they've owned for 16 days. Just not growing at all. And this is a company that's leveraged at 4 times EBITDA or so.
Right. Depends on how you look at it. The way the company does it, or we do it 3 times, 4 times with all the other sort of off-balance sheet stuff. But look, it still generates a lot of cash flow, and it is going to pay down debt over time. I think an incremental $1 billion or $2 billion in content in the grand scheme of things is a massive company. Is doable. Again, it could put pressure on cash flow and earnings. The key is turning around that wireless business. It's still by far the biggest business, and there were some signs that is starting.
Verizon's wireless business was fine. I mean, compare and contrast the results that we got from Verizon versus AT&T and the stock reaction after that, which is the better telecom.
Wireless is the place to be right now.
Yeah.
It's a very benign competitive environment. I think part of that is because we're seeing Sprint and T-Mobile try to get together. It's kind of sort of calmed things down a little bit, and you saw it in both these companies' results. The key issue is ARPU, what the average consumer
per user.
Per user, exactly. What the average consumer is spending, and that's starting to improve. We've now had 3 analysts in the past 24 hours use the word benign environment. Benign is the word that everybody seems to be using, in large part because they talk about the T-Mo potential deal with Sprint. Long term, if that deal is approved, and I don't know whether you think it's going to be, but if it is, does that create a better environment for Verizon, AT&T, or has it ultimately become a more competitive environment the way Sprint and T-Mobile would say it will? That's a great question, and I think it's a multifaceted question. I think if these two companies are not allowed to merge, the market is going to evolve into a 2-player space as we move to 5G. I don't think T-Mobile and Sprint have the financial resources to invest in 5G, and we're going to go back to something of a duopoly. If you look at it versus the way it is now, you would say that sort of the traditional market could get better, but I think longer term, things will. So you think it'll get more? You think if the deal happens, it gets more competitive, puts more pressure on pricing, and therefore is worse for all 3 of the, not all 3 of these companies, but for AT&T and Verizon. And the question is, if that's true, why is that not reflected in the stock? Or is there a view that you think people don't think the deal is going to happen? People don't think the deal is going to happen. I think we've said it's less than 50%. I think the street expects it to be much, much lower than that. As you remember, the DOJ blocked AT&T's acquisition of T-Mobile a few years ago. You don't think the world's changed? Not enough. Okay. Not enough. I mean, I think the FCC, again, looking forward, looking at 5G and taking the sort of consumer interest into account, could approve it. But I think the DOJ is going to land right where they did with that deal.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.